following is an update and technical analysis on the U.S. equity and treasury markets based upon the daily interval, in which I will hone in on a U.S. Tech 100 60-minute interval where I see a very significant price juncture, including an update on the Take-Two short trade setup on the daily interval. Here on the 23rd of November 2023, we're trading spot price 16,018, and it was a significant price resistance level amongst the 16,002 level that needed to be heavily defended by short sellers and or bear traders, really at all costs on a prolonged move to the downside, re-challenging the primary reactionary hidden downtrend line based upon the 2021 reactionary highs and lows. And it would be an ideal move right back down to the 15,718 price support that needed to be held in duo confluence of the primary downtrend line. And if and when long traders and or bull traders were to take out this previous reactionary high up above, that would more than significantly increase the odds of the probability of a panic of shorts begin piling out, covering in a potential short squeeze setup on a re-challenging of the 16,447 price resistance, and ultimately taking that level out would ensue a big move to new all-time highs. And here's the update. And upon getting rejected right amongst that key inflection point off the 16,002 price resistance, we ended up backtesting the 15,281 price support really to the button there for 2% drop to the downside, especially if you're an active and or day trader. Long traders stepped in really to the button, taking out, ultimately consolidating within this primary downtrend line, taking that level out, and that move to the upside, ultimately taking out the 16,447 price resistance. Once we took this key reactionary high right out, it was a short squeeze setup, big move to the upside, and a 7% surge, where significant improved financial conditions, which would call easing financial conditions and reducing potential rate cuts, having a strong effect on the yield curve, and reducing mortgage rates, fueled an unexpected surge in housing starts, were dominating the day's macroeconomic data and propelling home builder stocks on a big move to the upside. Are now considering this signal a substantial rebound from the previous lackluster housing data, especially as Powell flags optimism to the bull in the room in that last FOMC presser, signaling additional rate cuts next year. And here we are, breaking out of new all-time highs within the Dow Jones, NASDAQ 100, the US Tech 100 based upon the 60-minute interval, and we have some additional significant developments based upon this primary reactionary uptrend line off the beginning of December reactionary highs, and this is a very key inflection point here off the hourly time frame. We have nice, clean, confirmed divergent high between these two near-term troughs, with negative and bearish divergences really constructed amongst all four technical momentum indicators, only being re-challenged as of now, where long traders, bull traders want to defend this primary reactionary uptrend line really at all costs, to go on to re-challenge those negative and bearish divergences to squeeze out the rest of those shorts with no resistance up above. Short sellers, bear traders, they want to see a solid hourly candle close breakdown upon this primary reactionary uptrend line, only signaling a potential sell signal and or backtest on a prolonged move, big move to the downside, down to the 16,708 price support, additional 16,657 target 2 and target 3 at the 16,554 additional price support, with multiple major reactionary highs and lows to offset. If we get that breakdown backtest, then I will scale in. The sell signal must shoot off, and if we break down below this primary reactionary uptrend line, you will put additional damage, keeping intact the relative strength index divergence that has only continued to construct, only expanding on a much larger scale with additional moving average convergence. With already confirmed negative divergences, you'll have a confirmed crossover here, only inflicting more damage upon the Stochastics 1033, hovering down to retest its 85 threshold line for damage. Again, by no means am I already adding to the position until I see a further big breakdown sell signal on a solid hourly candle close below, where I will begin the scaling in process on a great risk reward short trade setup to the downside, with a ton of leverage that is just being flowing into the markets amid a frenzy of panic buying. Taking you out to the US 10-year based upon the daily interval, and we are revisiting a very key inflection point off the 3.91 price support, and that seems to be defended on multiple days by short sellers and or bear traders of the 10-year bond. That is a big key inflection point that has been defended 1, 2, 3, 4 days in a row there, setting up an aggressive short trade setup, big move to the upside if and when a sell-off were to begin to occur within the bond markets, which will ultimately flow into the equity markets for potential healthier pullback move to the downside. Taking you out to the US 30-year. And again, we are at a key juncture. Once again, once we snapped some key equity price resistance levels and then ultimately took out the big 30 long end of the curve here with the big breakdown sell signal was off to the races, ultimately undercutting the 200-day moving average and the 417 price support. And it was a big move to the downside. Ultimately, once again, as in the 10-year, consolidating briefly almost for a whole entire week now. Again, setting up what you would call an aggressive risk-reward short trade setup on the 30-year bond. For a prolonged setup on a spike of the yield to re-challenge the primary reactionary downtrend line for a potential bigger move if and when, especially if that level were to be taken out for a prolonged move up to the 417 price resistance up above. Taking you to the US 500 based upon the daily interval. And we have what I would call one of the last lines in the sand is this primary reactionary concealed major reactionary high and low uptrend line, which looks at the beginning stages of a potential channel here, which in my opinion would offer a great risk reward short trade setup, big move to the downside if and when we go on to backtest and or retest this key inflection point on a prolonged move down to the 47.51 target one price support, and additionally the 47.19 price support down below for a healthier pullback and or key inflection point. You could on a potential minor uptrend line if and when we go to retest and re-challenge that dual price support there, call it minor price support, when we come across some of those key significant price resistance levels. Taking you out to the US 2000 Russell 2000 futures based upon the daily interval, and we took out a major concealed reactionary downtrend line that I had been hyping up for almost a full year now, where we additionally caught this big head and shoulder classic looking top, ended up shorting it right off the split of the neckline based upon the 236 fibs retracement, put in that sell signal, and that was good for a big double-digit crash to the downside and really to the button, especially if you're an active and or day trader. Right at the 16, 36, 0 fibs price support was defended 3 days in a row here. Great inflection point to go long. That was a big move to the upside. Call it a 20, all the way right back up for 23% move gains to the upside based upon what we had a megaphone bullish continuation pattern with major key inflection points really across the board there. Once we took that level out, it was such a psychological level. Backtested the 236 fibs retracement, consolidated briefly, re-challenged it only to be rejected once again. The Russell 2000 has been a day trader's heaven when it comes to trading the small cap futures within small interval near-term active trading stuff. And finally, once we took that level out, just look at the green infused candle close up above the 236 fibs retracement, only confirming how psychological that level truly was. Consolidated briefly, and again, it was just off to the races. And upon reflecting the primary concealed trend line, we ended up breaking right back up above it, back tested 1, 2, 3 days in a row there, and was off to the races, re-challenging the 2360 price resistance, only to be rejected impulsively off that first key inflection point. And here we are, re-challenging it, where long traders and bull traders have really stuck it to short sellers, trying to advance, pop this level on a prolonged bigger move to the upside, ultimately re-challenging some of these key price resistance levels based upon the 50 fibs retracement at 2050 and the 2132 of price resistance up above. An additional potential price resistance right around the 2079, 2080-ish range. But again, very healthy technical momentum indicators really across the indices, all across multiple indices, with absolutely no short trade setup and or opportunities occurring in the near term as of now until we get those sell signals and or big breakdowns in what I would call the only tradable potential trade setup based upon the US Tech 100, NASDAQ 100 futures here on the hourly support. Other than that, anyone positioning for a big short and or key inflection point to bring down the markets, never overlook the swiftness with which sentiment can shift, whether anchored in reliable macroeconomic data or a newfound acknowledgement of not opposing or fighting the Fed. Be mindful of the rapid resurgence that can propel a return in an all-out rush into equities.